Hi friends, welcome back to my YouTube channel Tax Avoidance Strategies of the Richest People in the World. Have you ever wondered how the richest people in the world manage to pay little to no taxes while the average person struggles with hefty tax bills? The secret lies in complex strategies that allow billionaires to legally avoid paying millions, sometimes billions, in taxes. In this video, we'll break down the most common tax avoidance strategies used by the wealthiest individuals and corporations, from offshore accounts to shell companies. Let's uncover how the ultra-rich keep their wealth out of the government's hands. 1. What is tax avoidance? First, let's clarify the difference between tax avoidance and tax evasion. Tax avoidance is a legal way to reduce tax liability by exploiting loopholes and using legitimate financial tools. In contrast, tax evasion is illegal and involves hiding income or falsifying information. Today, we're focusing on legal tax avoidance strategies. Tax avoidance versus tax evasion. Think of tax avoidance as playing chess. The rich know how to move their pieces strategically to win the game. But how do they do it? 2. Offshore accounts and tax havens. One of the most well-known strategies is the use of offshore accounts in tax havens like the Cayman Islands, Bermuda, and Switzerland. These countries offer low or zero taxes, attracting billionaires and corporations. Example, take Apple, for instance. The tech giant has billions of dollars stashed in offshore accounts to avoid paying high corporate taxes in the US. Similarly, billionaires like Richard Branson and Roman Abramovich use offshore trusts to shield their wealth. Offshore accounts equals lower tax bills. 3. Shell companies and trusts. Another popular strategy is the creation of shell companies and trusts. Shell companies are inactive companies that exist only on paper but hold assets. Trusts, on the other hand, allow wealthy individuals to transfer assets without triggering taxes. Example, Amazon founder Jeff Bezos reportedly uses various trusts to manage his wealth, minimizing tax liabilities. By placing assets in trusts, billionaires can protect their wealth for future generations without paying estate taxes. A trust is like a vault where the rich keep their money safe from the taxman. 4. Real estate depreciation. Real estate is another powerful tool for tax avoidance. The richest people often invest in properties and use a concept called depreciation to reduce their taxable income. Example, former US President Donald Trump famously used real estate depreciation to lower his tax bill. By claiming that his properties were losing value over time, he reduced his taxable income significantly. Even though the properties were increasing in market value, depreciation equals reduced taxes.
5. Borrowing against assets. Instead of selling assets and paying capital gains taxes, the rich often borrow money against their assets. This strategy allows them to access cash without triggering a taxable event. Example, Elon Musk, the world's richest person, reportedly took loans against his Tesla shares instead of selling them. By doing this, he avoided paying capital gains tax while still accessing billions in cash. Borrow, don't sell. 6. Capital gains tax loopholes. The wealthy also benefit from lower capital gains tax rates compared to income tax rates. Capital gains tax is applied to the profit made from selling assets like stocks or real estate. Example, Bill Gates and Warren Buffett have amassed their fortunes through investments. By holding onto their stocks for long periods, they pay lower capital gains taxes when they eventually sell. Capital gains equals lower tax rates. 7. Charitable donations. Charitable donations are a win-win for the rich. They reduce their tax liability while enhancing their public image. Example, Mark Zuckerberg and his wife pledged to donate 99% of their Facebook shares through the Chan Zuckerberg Initiative. While it sounds altruistic, this move also provides significant tax benefits. Charity equals tax deductions. 8. Stock options and deferred compensation. Many CEOs receive compensation in the form of stock options instead of salaries. Stock options are taxed at a lower rate, and executives can defer paying taxes until they cash out. Example, Tim Cook, CEO of Apple, receives a significant portion of his pay in stock options. This strategy helps reduce his overall tax bill. 9. The step-up in basis loophole. The step-up in basis loophole allows wealthy individuals to avoid paying capital gains taxes on inherited assets. Example, imagine a billionaire buys a property for $1 million, and by the time they pass it on to their heirs, it's worth $10 million. Thanks to the step-up in basis, the heirs won't have to pay capital gains taxes on the $9 million profit. Step up in basis equals big tax savings. 10. Corporate tax avoidance. Let's not forget about corporate tax avoidance. Large corporations like Amazon, Google, and Facebook use complex structures to avoid paying high taxes. Example, in 2020, Amazon paid just $160 million in federal taxes on $13 billion in profits. That's an effective tax rate of just 1.2%. Corporate tax avoidance in action. 11. Criticism and public outrage. While these strategies are legal, they've sparked public outrage. Critics argue that the wealthy should contribute more to society through taxes.
12. Conclusion. In conclusion, tax avoidance strategies used by the richest people are complex and often beyond the reach of the average person. However, understanding these strategies sheds light on why there's a growing wealth gap in the world. Thank you for watching. Don't forget to like, subscribe, and hit the bell icon for more insights into the world of wealth, power, and finance. Call to action. Let us know in the comments which strategy surprised you the most. And if you'd like us to cover more financial secrets of the ultra-rich, drop your suggestions below.